Everyone, Paul here. Today I'm going to be looking at the formula that I was talking about yesterday, and we're going to see how it will work on certain stocks and stocks, futures, and forex, and seeing going specifically into specific stocks and crypto and things like that, and seeing how it will benefit if it works. We're going to look at the past charts on there and see if it'll how much you could potentially make just by following this chart. Now, if you guys haven't seen my last video, make sure you check that out. I walk you kind of through the formula of setting this one up. Today I'm going to be going over we're going to go over the stock, we're going to go over MicroStrategy again, and we're going to be going over the strategy on how it could help you find good moments to get in and get good moments to get out, kind of the strategy going on. This is for entertainment purposes only. I'm not responsible for any financial loss with these videos. But anyway, let me show you the formula, and then let me show you how much you could potentially make if you do this strategy. Now, we're going to be looking at MicroStrategy. The contracts, when you're doing options trading, are expensive, but if you do have that budget, this is because what I do focus on with MicroStrategy is my goal is to get to an in the money contract. We got to focus on getting that little dot as close to in the money as possible. That's usually around 6,000-7,000 with the in the money contracts. But if it's in your budget, it's in your budget. But it's a long-term goal for me right now. Right now, what I do is I focus on the smaller stocks. But we can look at MicroStrategy right now and see what potentially you can make with plugging in this formula with doing charts. Okay, so this is the formula that I use. I use my 3S M&A, the 3 smooth moving average. Previously, I only used 2 here, but you have to use all 3 moving averages for this to work. It's the 5 and 8, which is part of my old videos, and it still works pretty well. But I just added the 20. And I added a third moving average, and then I used my TMA overlay, and which is when you first put it on here, you're gonna you don't need all these EMAs here. You can check them off. You'll need to check all those EMAs off. You'll need to check off all the session background, trend fill, and it just points out the signals here, and then you go back and forth between RSI and stochastic. That's personal preference. So with MicroStrategy, it all depends on which. This will work on. This will probably work on the longer time frames the best. So what I want to look at is, let's look at this on a weekly. Now on a weekly here, you don't have to stay in for long. You basically just ride one candle, so you just have to make sure it's crossing. Now this is almost a guarantee way of getting gains, because if it's crossing, it'll be going in that direction for that entire week. So you just got to make sure you're right. So let's just look at a couple examples. Now, first thing I do is I hide the candles, and I look at it with the moving averages. So we notice that there's a cross. There's a cross here, and there's a cross here. Then these are weekly candles. So I'm not going to go too far into this because these are weekly candles. So what we're going to be doing is look at this weekly candle here. And what we want to do is right here where it crosses, you see this is a good indication to get in. Now if you came in here, you rode this out, you would have made, there's a $29 difference in price in, I think, was that a week? Okay, $27 difference in price in 7 days. So with a good in the money contract, that would have been around $2,775. So let's, and also if we looked at it on the RSI standpoint, you could have come in down here when the RSI cross. You got your signals here with the TMA overlay right here. It signaled a good move right here. And if you went by just the signals from the, you have basically three ways of finding good trades here: through the EMAs, crossing, through the RSI, and through the signals of the TMA overlay. The TMA overlay gives you a good signal, gives you a good signal here, gives you a signal here. Well, that's a downtrend, but signal here. So these are two good signals. So if you rode this one out, and it kind of goes right the same, matches with the RSI there. So this one, was a $33 difference in price. With a good in the money contract, that's about $3,392. And then right here, if you came in here now, because these are weekly candles, you don't have to ride these for too long. This one is 32. This one is a $3,238 on average. Now, all you have to do on the weekly is basically look for the moments when it crosses. You can also take a risk and see when your TMA overlay gives a signal, but if you're going on what the TMA overlay is saying, make sure you're going with the trend. An example like here, you see that the moving, let's clear the candles here. See, the moving average is telling you that this is a downtrend. So it would be a bad thing to do a call at this point, even though it signals it. I would still go with the trend. So I would have picked up and I would have done this one instead. So it's important to go with the trend. So I would have gone to this one. I rode that one out. That is 14 days. We want to look for 7-day. This is another $38 difference in price. That's about $3,855 if you can afford in the money contracts. So anyway, there's three ways of finding signals. We've covered on the weekly. So the first thing you need to do is have your moving averages loaded. You need to make sure you're going with the trend. And you go at the moments when it starts colliding, collapsing, and that's the start of either going up or down. You can look at your TMA overlay. Now, when you're doing this on the weekly, you only need to follow one candle because that's a 7-day weekly. So you can't follow longer because unless you buy a longer contract. But you got to be sure because in the moment, either it has to cross with the RSI or it has to collide with the moving averages to be pretty sure that it's going to be going in that direction. Maybe let's look at this on the daily and see what results we can get. Now with the daily, what we're looking at is a 7-day. So what we want to look for is a cross. What we want to look for are the moments when it crosses, which is right here. So right here, and you can tell right here with the RSI that it's going a little bit sideways. So always when that yellow dot is like in the center of the RSI, it's usually like sideways. It gives kind of a sideways. So anyway, let's look at one or two here. Okay, so we see that the moving average is crossing up right here. So this would be a good moment to get in. We also see that in the RSI. So let's just see what happens. So the moment it crosses right here, you could get in here, but the moving average is crossing here. So you can ride this out for a little bit. So for 7 days worth, $31 difference in price. About the same as doing it on the weekly. And a bunch of sideways here, so I wouldn't personally do these. And you could look at your side, make that judgment. Always look and wait for the yellow line to be way up here or way down there. Let's look at another moment. Okay, so it crosses right here. So this is a good moment to get in. You can get in here or here. So we come and check this one out. You can ride this out to about here. This is 4 days. And this is $4,166 gains if you did a good in the money contract. So anyway, you guys get the general idea for how to make this work. So I'm going to give you guys an example of what kind of contracts I buy. So I always do in the money contracts. So I said the contracts are expensive. They're really expensive because they're more expensive than most of the contracts because this is one that moves with Bitcoin. And you know, potentially if you can afford the in the money contracts, you'd be making at least a 4-figure a week income if you do things right, if you know what you're doing. Let's just look for example here. This one right here. Let's just say, see, we're doing a call. Okay, so it's predicting it's probably going to be a put. So let's just do that. Now, like I said, it costs around 5, 6 to 7 for the best results. So it's not a cheap contract. Let's do the 65 here. And the goal here is to get this as close to the dot as possible. So, like I said, the 68. This might be one that I would do if I was looking at the charts. But anyway, as soon as it gets past that dot, you're in gains. Now, if you're going in the right direction. But anyway, let's look at the charts. Let's look at the let's look at it on the hour and see how this works on the hour. Let's just go back a bit. And you see the same rules applies for everything else, but I would not do this on the 1 or 5 minute. It's just not worth it in my opinion. Okay, so you see that the moving averages here are collapsed. And you see this in the RSI too. You see the signal with the TMA overlay. So based off of the EMAs, if you came in right here and rode this out, and you can still look at your RSI when you're in your trade. Okay, so this is, well, let's just say 5 days. 5 days you made, there's a $51 difference in price, so this is a $5,170 move if you got the right contract. So let's just look at a couple more. You always want to go with the trend. Let's do this small one right here. We see that it is crossing right here. The moving averages are crossing. So this is good. This is a good moment. So right about here is when you would enter. You ride this out. This looks like the end of a trading day to me, but in 3 days, almost 4 days, $16 difference in price. That's about a $1,616 gain right there if you got the right contract. So anyway, if you guys like this formula, it works really well. I'm not responsible for any profit or loss. If you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.